10 p.m. on Tuesday, September 17th, and it's the 77th edition of the Japan FinTech Observer. Let us dive right in. Quite a lot going on in the past week, event-wise. Happy birthday, Cardano. The collective Cardano Brain Trust was in Tokyo earlier in the week and then in Osaka for the second half to celebrate the 7th or 8th birthday of Cardano, which was brought to life in Japan. Charles spoke on Tuesday at the Tech for Impact Summit. That's a recording that we've done, made public on the Tokyo FinTech YouTube channel. It's included in the Japan FinTech Observer. It was a non-technical talk, almost blockchain free, so you can give it a listen about humanity, enlightenment, and exponential technologies. That's how I described it. It's very easy digestible. I think he got more technical on Wednesday at the Tokyo Institute of Technology, which is one of the research bases for Cardano. Then I think it became more jovial for the celebrations in Osaka. Well done, great team. They also published a list of all the projects that have been done or are still underway in Japan, with the total number coming in at 110. Quite impressive. Wednesday, we had Metaverse companies from Korea sponsored by Pan Ventures as an accelerator and supported by various Korean government agencies, just like JETRO would be doing it for Japanese startups. They came with 12 startups in broadly the Metaverse space. So you could see anything from virtual worlds to production pipeline for the Unreal Engine to virtual reading glass fitting applications. Also an ad tech that was focused on collecting third-party information, which at least was deemed very important as long as Google was doing away with the cookies, which they're no longer doing. So some interesting startups, certainly. Based on talking to these companies, the Metaverse was dead in 23, but recovered quite well in 24. Many of them had a dent in revenues last year, and they're coming back strong. One can expect that many of them might exceed their 2022 revenues. Some of them also work with Japanese clients, for example, virtual worlds built for the city of Yokohama and Tottori. One is to allow kids who can't go to school to be part of a virtual community, and the Tottori one, I think, is much more for tourism. Not only Japan, quite a bit of hype in the metaverse space, but also Korea and also the Korean government very much supporting their startup ecosystem, and maybe even more aggressively than JETRO and the Japanese institutions. Going into what happens this week, which is, of course, central bank week, before the Bank of Japan comes into their monetary policy meeting on Thursday and Friday. The Fed will meet on Wednesday. There was a Reuters article today talking about the implied expectations for rate cuts that the yield curve projects, which were commented on by BlackRock at being unreasonably optimistic, meaning a few cuts too far. And the yield curves tell us that we should expect 120 basis points until the end of this year and 250 basis points until the end of 2025. That would bring the US rates down into the 2.8, 2.9 range. And that is relevant in the context of the Japanese yen exchange rate versus the US dollar, which had a print of 139.x when I was writing the weekly status report yesterday, and it's just above 140 again. So no doubt the events this week and the decisions the central banks make will have an impact and increase volatility. essentially priced in at least a half-point decrease in the Fed rate on Wednesday. Actually, the inflation is still relatively persistent and they're only going down a quarter point. That means that the yen should weaken a bit. We shall see how much of that is priced in, how much are we waiting then for the Bank of Japan to act. CNBC has done a poll of anybody in the market. There's been 32 economists. None of them expect a further rate increase by the Bank of Japan this week. It's either going to be December or January based on that. As far as that is concerned, the jury is still out. It's almost a 50-50 split. Now, we're not looking at the whole population because the folks that we're following, which is 4 or 5 people, were spot on when it came to the last raise, which supposedly surprised the markets and caused the August 5th sell-offs. We were not surprised because our little sample was spot on. Our little sample is now also part of the 32 and therefore not expecting any Bank of Japan action this Friday. I wouldn't quite put the odds at 100% simply because Ueda's Bank of Japan clearly has taken the job of normalizing monetary policy very seriously. And they might well, as they still have indicated in speeches by Ueda or the vice chancellors, see this virtuous wage price spiral coming through. If they are of the conviction that this is actually materializing, they might take advantage of surprising the market. We're still at 0.5%, right? They probably would generate some market gyrations again. There will be additional data during October, and traditionally prices are raised. Traditionally means, let's say, it started really last year with almost a coordinated attack on the Japanese consumer, where everybody suddenly started raising prices for the goods of daily consumption, and of course also durables in the end, but the impact on daily consumption is much bigger. Just to give you an example, there's obviously weather factors and climate factors that play a role, but Japanese rice, which is the rice that you buy here, was essentially not available in the shops for a long time, and it was a ration, so 1 pack for family. Now that the new harvest is coming in and you get rice again on the shelves, it is 20 to 30% more expensive. Rice is not the only thing you're buying. Therefore, it doesn't determine the inflation rate. But Ueda-san actually admitted as much in his speech earlier this month or late last month as well. The price increases on daily necessities are higher than the inflation rate. And that obviously impacts in particular pensioners and so on who are living on a fixed budget, who don't necessarily get these wage increases if you change your job now and you have a shortage of labor. We'll see how comfortable corporations are putting input cost increases through to prices to the consumer again in October. We will also see further evidence whether the wage negotiations that took place in April have actually triggered through to the service sector, which last year was very weak, but according to the observations of the BOJ, this year is stronger. If you really want to observe these data points, then you need to go through October. And therefore, the question, will the next rate increase come in December or January? The additional factor in all of this, of course, is political uncertainty. The LDP election is now full swing. We've got 9 candidates, which is the largest field ever. I recommend you follow Tobias Harris. If that's of your interest, then I think go to Tobias Harris blog. You get a really good rundown of the race. Koizumi had declared that should he win the LDP presidency, which means that typically just a few days later he will become the new prime minister of Japan, that he would call for general election, which will then arguably happen as early as October. So coming back to the Bank of Japan, whether they would want to raise rates right now, given the uncertainty of the outcome, remains to be seen. The counterpoint remains that their mandate is to normalize monetary policy, and they will raise rates as much as they can whenever they think they can do it. It will be an interesting Friday. I'm sure the FX traders will be positioned Wednesday prior. We have some action from the Fed. So that's enough on the macro picture, macroeconomics and politics. Let's dive into what else we've seen this week. The other item that we highlighted before actually getting into all the topics that we usually cover is that at the end of August, the FSA put out their strategic priorities for the year from July to June next year. The English translation that they've provided is really short summary, so we let Gemini do its work and take the about 40-page Japanese original, so you don't have to filter out what is really meaningful. The three high-level headline items are meaningful and remain. Let's mention them once. So one is contribute to sustainable economic growth through financial mechanisms. Second is ensure the stability and reliability of the financial system and the provision of high quality financial services. Third, as has been the case over the last few years, is enhance the FSA administrative capacities. So that's a competency question. Probably not unexpected what's in there, but if you leave the English summary to the side and you look at the overall document, it is a very good view into what's going on in finance and fintech in Japan, right? Because if it comes to digital transformation, if it comes to crypto, digital assets, etc., clearly that's a benefit of having a single regulator. It all ends up with the FSA in the end. The question is in what bucket ends it up. And I want to talk about the buckets a bit more on the occasion of having had some interesting conversations over the last week. We have this under the venture capital section. The current DCP is a consortium of more than 40 companies. They have been hard at work to establish what I call a stablecoin. They raised 6.35 billion yen in a Series A from 13 companies, which includes banks, technology companies, and even A-Beam Consulting. That was a bit of a surprise, but good investment. Well done. They've been working on a digital currency, DCJPY. They put the production system live and did production testing from June, July, August, and officially went live at the end of August. That was the second stablecoin in Japan. It is a tokenized deposit. Under what people typically refer to as coin regulation in Japan that came into effect in July last year, there are three different types of digital currency type stablecoin. And that is all that is currently out there in the market, even out of the three categories of digital currency type stablecoins. It's really only the tokenized deposits to date, which means essentially you have a bank that takes normal deposits. You also have deposit insurance that holds. Banks are quite rigorously regulated already. Tokenizing these deposits doesn't change the regulatory and supervisory regime too much, so banks are allowed to play. In the current consortium, it is GMO Aozora Net Bank who is issuing the DCJPY, and it's backed by deposits at GMO Aozora Netbank. The first use case they have actually now also implemented in production is what they call the digital trading of environmental value. It's carbon credits, etc. And the settlement of these then happens in the digital currency DCJPY. It's an institutional system. the work that the current DCP has done over the past years in terms of running different pilots, it definitely had a number of retail use cases built into that. For example, it worked with some of the electric power companies and consumers to prove a use case around paying your and electricity bills through DCJPY. It's just a question of time as they're rolling out these things that they get larger scale and more use cases. They've tested out quite a few. If you want to check out their website, what they've done over the past years, it's quite impressive. Certainly, it's going to be a big player. Let's get back to what else is out there. So you either need to be a bank or you need to be a trust bank. The trust bank, the legal instrument, is slightly different. It's a beneficiary note for the bank deposits. The third way of doing a stablecoin in Japan is by being an electronic money transmitter. We obviously need to do additional qualifications. And if you look at what another project is doing, they currently have a money transmitter license and they want to do the JPYC stablecoin under the section that is money transmitter digital currency type stablecoin. So much for that. There has been in April the first stablecoin coming from Hokoku Bank, one of the regional banks around the city of Susu. They actually were the first to declare that they're working on this. That was in April 2023, and they were trying to get it in before the end of the calendar year. Took a little bit longer and they went live in April. So it took them a year, and clearly there were consideration with the fiscal year end, the fiscal year in Japan running from April to March. In the end, between them, all parties concerned, and the regulator, they decided that it would be April. And that's an example of a regional stablecoin. It's tied into a specific wallet. The stablecoin is called Tochika. There's a Tochika wallet, and there's a Tochipo for Tochi points. If you buy in regional shops that then accept this regional stablecoin, you can get points, etc. In order to load up your wallet with Tochikas, you need to have a bank account at Hokoku Bank, and then you can, in your banking app, basically transfer that back and forth. So the redemption at par is then ultimately guaranteed through that mechanism as well. We had an interesting side discussion last week. That's not a stablecoin. And if you're coming from outside Japan, you might well say this is not a stablecoin, but it is what has been put into law. The funny ways how people might arrive at promulgating a law and putting it into effect might not always reflect that individual's opinion. Ultimately, it's a consensus and maybe also a bit power or majority-driven process. There are no other stablecoins. Circle is partnered with SBI Holdings, I think, SBI Digital Assets, to bring in their stablecoin here. Cryptocurrency exchanges in Japan currently are not allowed to trade these stablecoins because they're essentially regulated as digital cash. They're regulated under the Payment Services Act, not under the cryptocurrency regulations. So that's certainly something that the exchange is also lobbying for. They want to do two things. They want to first settle against also global stablecoins like USDC, but they also want to bring up Japanese yen stablecoins and make them available to the rest of the world. And the only people who've done that so far is GMO Trust. They actually issued Japanese yen stablecoin under the New York Department of Financial Services, NYDFS, under that regulation. They have the mechanisms, they've got to set up and could work it there. Clearly, they'd be more than happy. And there's others working on it here in Japan as well. Whether you think from the outside of Japan that's a stable coin or not, it's the only piece of digital money to be redeemed backed by fiat currency and redeemable at par that exists there today. And there's these three types of it. What else happened? Venture capital. You still see Japanese companies going into Southeast Asia. So MSIG Asia, which is part of MSNAD, they've entered into a partnership and they've taken the stake in Serenity Health Partners to redefine what health insurance might look like. See the banking giant, like also 40 other companies, have invested into the Japan Hydrogen Fund. That's ultimately the national initiative to develop a hydrogen-based supply chain here. What's different for SMBC is that their subsidiary Sumitomo Mitsui DS Asset Management is one of the three co-managers of that fund as well. So not only invested, they also manage it. We spoke about the current raising. We have investments from Aozora Bank, Mizuho Leasing, and Mizuho Bank in Genesis Alternative Ventures, which raised $125 million for its second venture debt fund focused on Southeast Asia again. 30 million of that came from the Japanese investors. And then you have Japan Investment Corporation, whose mandate is to support the startup ecosystem here in Japan by funding venture capital funds, by funding maybe startups directly, occasionally as well, and also by bringing in venture capital firms into this market or accelerators who are more mature. They actually got very generous funding, and so they expanded their mandate a bit to also include foreign startups that then would eventually want to come to Japan and help invigorate the startup ecosystem here. It's like a two-stage bet, right? First of all, you invest in funds. In this case, it's Atomico, which is a European fund. They take a bet on the startups, and then on those that actually make it, you're also then betting that they would come to Japan. Those who've tried know how hard it is to get into the market, how much resources it takes, how much time it takes. If you're still a relatively early stage startup, can be really hard. Bit of a cynical interpretation here of saying they got so much money they actually can't invest it in the ecosystem here in Japan at the moment. So they've done a number of ex-Japan fund investments, startup investments. They've done here into Atomico, into an early stage fund and the growth fund. Second point, industry-wise insurance. We had all this trouble last year with insurance. We had the big motor scandal with secondments of personnel to big motor with body shop and car dealership for fixing accidents. There basically was fraud going on. Then on the corporate side, there were agreements on pricing for large corporate buyers, who's competing, who's not competing. 4 large non-life insurers have been put under administrative actions. Now they have the pleasure of reporting every 3 months how they're progressing against what they said they would fix. Some of that is pretty mechanical, of course, but because we're talking here about fraud, it's a lot to do with company culture and conduct, which is a large training effort. And to prove that you actually changed it is really hard. Changing the culture in a company is the hardest thing. Banking, again, Southeast Asia theme. Japanese government and JETRO tells you invest in Japan, and all the Japanese are investing in Southeast Asia. Should make you think, right? There have been rumors around SMBC taking majority stake in India's Yes Bank, but apparently that's not going to happen because the central bank doesn't want a foreign owner of a relatively large private entity. MUFG clearly been the strongest in Southeast Asia. So for both Mizuho and SMBC, there's a bit of catch up to do. And that would be a really nice acquisition for SMBC, especially now that you have cross shareholding unwinds in Japan, creating liquidity that either might you increase your dividends, have a special dividend, and that's maybe for 20 or 30% of money that you generate from the divestments. You can invest organically in changes and invest in new project, or you go external acquisition. And For example, for Toyota shares that have been sold in the recent Toyota bidding, be very good use to actually put it into play and into India for Yes Bank. We've got core banking news. Core banking is just such an interesting topic because around the world, companies popping up. The most recent acquisition in that space was Pismo, Brazilian vendor for around $1 billion valuation acquired by Visa. We actually did a podcast with the international CEO of Pismo. If you want to look that up, it's very interesting. It's just that all these vendors have not made any inroads in Japan because mostly it's still we're building our own core banking engine, which Fuko Financial Bank has done for its digital bank, Mina Bank together with Accenture. Here, Shizuoka Bank and Hitachi actually had built an open core banking system. They developed the thing, and then, same as the intention was for Mina Bank and Accenture, they package it up and sell it to other industry players. In that sense, it's not a new platform. They've done the technical testing for migrating it to AWS. I will spend the next 2 to 3 years on actually making it a public cloud-based core banking system that, again, then Hitachi will package in their open-stage product to market it to other clients in the market. Raksul has declared they're working with SBI Sumishin Net Bank, which is one of the largest providers of these banking as a service, to build an offering for corporate clients primarily. We actually had an article picked up earlier in spring about Tokyo Star Bank offering accounts to non-residents, and Tokyo Star Bank is owned by a Taiwanese bank, so this specifically people then who can go into the bank branch in Taiwan and fill in all the paperwork and authenticate themselves. They were able to open a bank account with Tokyo Star Bank, transfer money, and then also based on the overall banking relationship they have, get real estate loans. Bloomberg has picked up on this story in the last week, so we included the link. It's an interesting business model. You would think they've grown 15x in that business. Of course, I would say it's been small numbers to start with, but it's a booming business for Tokyo Star Bank, and bless them, they're doing well. Since we're there on digital banks and core banking system, we've got Kiraboshi Bank in Shiba, which also has a digital bank that is UI Bank, and they've actually used a core banking system that Shinhan Financial deployed in their regional entities across Southeast Asia. Vietnam, for example. It is a low-cost platform, very efficient. Apparently, Shinhan had so much success and fielded so many inquiries about how they build their digital offering. They're now going into the digital transformation consulting business. They're not the first. Standard Chartered has done similar. They said, we've built MOX in Hong Kong. We've done other interesting stuff. So we also have an entity that essentially helps competitors on the digital transformation journey. Capital markets, of course, the 7i story is still going on with Canada's ACT having a bid rejected, and now 7i Holdings has engaged Nomura for their defense or maybe eventual sale when it does come to some kind of a bidding war. On the asset management side, MUFG at the beginning of the year announced a big plan how they're going to also change their business and become more asset management focused. And a large part of that was to make MUFG Asset Management a direct subsidiary under the holding. So basically lift it up one level. They've done, and now they are moving other parts of asset management business that have been built in MUFG Bank and MUFG Trust and Banking over the years, moving it into MUAM. Doesn't necessarily change what they're doing, but it's a concentration and consolidation of the asset management capabilities to really make that a sustainable business. Digital assets, we talked about Cardano at the beginning. announcement yesterday. I snuck it into the report that was supposed to end on the 15th. So forgive me. There's been hype on Sonium, of course, which is the Sony Block Solution Labs Ethereum Layer 2 blockchain. Circle announced that they will make a bridged version of their USDC stablecoin available on Sonium. There was an article on a subsidiary of Tokyo Electric Power using renewables when there's an overflow coin mining and other digital assets. I haven't looked into that sector for quite a while. I've done this intensively with a German company in 2018. At that point, the economics and also the technology actually was such, and I think that still holds. Mining difficulty is at a very high levels. If you buy advanced GPU mining gear and you're not using it 24 hours a day, the economics are not necessarily favorable. The point here is, of course, that renewable energy comes with peaks and troughs. We won't have solar during the night, and the wind doesn't always blow. When you have a peak that you can't feed into the net, then you need to discard it. Or actually, you have negative, in Europe happens a lot, negative feed in tariffs. So you actually need to pay to get rid of your electricity. That's where this whole argument comes from. Can we use this overflow energy to mine some Bitcoin? But then you have it just for whatever, 3 hours or so running high-priced GPU mining gear for 10%, 15% of the time really doesn't make much sense. The calculation also confirmed that currently it's not suitable, but when you imagine a world where 50% of the generated energy is renewables, it might become a different story. Ops has quite a good following and community in Japan. And Animoca Brands Japan, the Japanese subsidiary of Animoca Brands, is going to become a node validator for Ops, which is good. Oasis, which is a Japanese originated gaming blockchain, but incorporated in Singapore for reasons of token taxation, digital asset taxation in Japan. They have now partnered with SK Planet, one of Korea's leading ICT companies, and also a large wallet provider. That is Oasis' way of cracking the Korean market. Crypto Garage and two other companies said they will tokenize real estate, in particular those timeshare units. And this could be the traditional providers, but there are quite a few startups as well that do cabins somewhere in the countryside or in a national park. If you have an ownership share there, yeah, tokenize it. SBI NFT is working with Lawson Travel and Lawson Ticketing on issuing pre and during and post trip incentives for people who want to go on a K-pop trip to Korea. You get limited edition NFTs for the K-pop idols you're going to see, and your ticket itself is terrible. So you can actually, like a real paper ticket that would be torn, it gets invalidated when you enter the venue. Last word and last comment here. What I included at the end of the weekly newsletter is really worth taking a look. There are very smart people here at a company called Asymmetric Advisors, and they used to put out their weekly view on the markets for all to see. At the beginning of the year, they made, unfortunately, the decision to take that private, quote unquote, and make it only available to their customers. This week's edition, they made publicly available again, and there's a reason for that. They typically, it's not necessarily contrarian, but certainly out of the box, out of consensus views, although very well argued. They essentially projecting an inverted yield curve in the first half of 2025, between the 2-year and the 10-year JGBs, which nobody else has on the radar screen. Everybody was piling into the banks because we are now out of zero interest rate policy. We have a pathway, although it will be small steps over the next 2 years or so to get to a normalized Bank of Japan rate around 1%, 1.5%, probably at the end state somewhere there. That's all good for the banks. You can read the quarterly reports, and most of them have included each 10 basis points increase in the reference rate will mean X billion yen more in revenue. That obviously works under the assumption that you have the traditional maturity transformation. So you're taking short term and you lend it out longer and you get paid more for the longer end. But in an inverted curve, the longer end has a lower interest rate than the short end. That's not a good situation for the banks again. So ultimately, they're making the argument that the banks are overvalued, and I'm certainly arguing against piling into the bank shares at this point. So word of caution and out of consensus view, which I thought was generous of them to make that publicly available. That puts me at the end of what was in the report. There usually are a few things that picked up just reading. Yeah, so there were trust banks. The 3 mega banks have trust bank, then there's Sumi Trust, and Nomura would want to go and build an independent pillar for trust banking as well, which they think they can do a specific flavor of, given that they are a broker-dealer. There's an article on what SMBC is doing. So SMBC has a partnership with CCC, which is Culture Convenience Club. I hope I have this right. And they had a point system which they put together with the SMBC point system. So the CCC was the T points and SMBC had V points. And now it's basically the color scheme of the T points, but the V point named from SMBC. So they merged this critical mass and have scale as economic zone, as these point systems are called very often in Japan. Also, that combination SMBC, CCC, and Starbucks, they created a store in Shibuya that is a combination of a Starbucks with a bank and people you can actually talk to about new banking products, and then a lounge area for members of the SMBC Olive Card, which was the first implementation in Japan last spring of Visa's new functionality, where by using an app you can switch one card from debit to credit mode, and also point mode for that matter. It's a kind of embedded into the consumer experience. And they're planning to do more of these shops while they are still shutting down branches that are not working that well. Certainly see many more creative approaches like that. There was a long article around the attempt of PayPay, and they've been approved to take salary payments into the PayPay wallet, and what it took technically to accomplish that, because this falls under labor regulation. The concern for the regulator, outside of all the concerns that the FSA might have around being an electronic money transmitter, is that salary payments are, of course, critical. Should PayPay go bust and be unable to meet the obligation, time is of the essence. So big emphasis was put on, in a case of bankruptcy, how quickly can the guarantee company step in to actually provide the clients liquidity so that they can pay your rent, they can go grocery shopping, etc. And they've done that, basically transmitting data not in real time, but end of day data to the guarantee company, so they have a view as to what they need to hold up. Apparently, there are 4 more companies in the pipeline applying for it. So it's not necessarily an avalanche of new service offerings there. It is a relatively complicated setup and limited setup. Also in PayPay case, you can only take 200,000 of your maximum 1 million balance into the salary bucket. Bit clunky still, but I think it's also, as the regulator, Ministry of Health, Labor, etc., gets more comfortable here. Maybe we'll see simplifications in the future as well. Been a long session. Hope you enjoyed it. Thanks for joining today.